Hi folks, Lee Gettess here with the Market Sense for the week of November 10th, 2015. Once again, we'll be staring at some charts that come from the Trade Navigator software. And looking at a weekly bond market chart, you can see they had a substantial breakdown last week, largely due to a strong employment report that made it look like the Fed might have room to raise rates. We'll see about that. Not really a lot of damage done here. I mean, it could be. Don't get me wrong, but you can see where they had the previous swing low here, and after a big move up and then down and up and down again. This hasn't really broken anything here. It poked through it and still holding it, so there's a chance they could bounce right back up from here. This week, we're looking at support down here around 150.12 and resistance all the way up at around 154.20. I think there's a very good chance. We don't have a lot of economic news until Friday's PPI report, so there's a very good chance they don't trade either of those levels. If they're going to bounce back up, they might hold right in here and not even go to support and just turn back up. And look, I'm not telling you they can't be over 156 or below 148. Both of those things are possible. But we don't have anything really scheduled to drive them this week, and they had a big week last week that they're kind of digesting. So a little consolidation that doesn't trade either of those is probably the most likely scenario. I would, however, caution not to get too terribly bearish just because of that one big week down. They could break, but they really haven't yet. Stocks, well, sort of the same situation. Obviously, they look very good with this big run up, and they've broken down a bit this week, but I mean, come on, look at the chart. Does that look like a good market? We were kind of expecting to see them up in the 2115 area up here. Instead, they're down here holding the middle moving average around 2070. Again, I'll say, does that look like a pretty good market? Let's say they broke down hard. Let's say they got all the way down here to the 2040 area. That'd still look like a pretty doggone good market, wouldn't it? So, I mean, I don't know if they'll hold here. I think there's a good chance they will. And I think there's a really good chance they're going to take out the old highs, well, before the year's out anyway. But this is an awfully strong momentum move here, a little back off. I don't think it does anything to change the basic premise that they want to go higher. Obviously, the focus on the Fed raising rates and if they do and what does that mean and blah, blah, blah. I'll just repeat what I said. They could break all the way down to 2040 at that lower moving average there. They'd still look awfully good. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.